afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets give up early gains to trade with cuts. PSU banking stocks lead the fall as the index drags for the fifth straight day. MSCI slams Indian exchanges' move to stop sharing data with foreign peers, says it could be harmful to international investors. Punjab National Bank continues to trade with deep cuts as brokerages start putting out estimates on the impact of the 11,000 crore fraud. And the Supreme Court dismisses Malvinder Shivinder Singh's pleas seeking a stay on the enforceability of the 3,500 crore arbitration award granted to Daiichi Sankyo.
Well, those are the headlines, viewers. Thanks for tuning in to Countdown. My name is Neeraj Shah, and bring up the equity markets. There's a bit of pain out there. We're trading close to or at the lowest point of the day, and this is despite the European markets not looking all that bad. They are trading flattish, small tick of grain out there. The Dow futures as of now in the green too. We have own problems to contend with. I believe the Nifty Bank once again, the key culprit. The Nifty Bank will come up on your screen, and the top loser really currently 196 points down, trading at the low point of the day. The heat map will show you that SBI, ICICI Bank and the likes of the larger heavyweights have had some problems in the session today. There's a large tick of red, by the way, so that is the first thing that we want to establish. But within that, look at banks and financials. So Indiabulls Housing 3.5, Yes Bank about 2.5, State Bank of India about 2 percentage points. Somewhere I'd seen ICICI Bank right here 1.5% down, Axis Bank about 1.25%. So banks have a spot of bother. No bank in the stocks which are in the green, but for Kotak, which is about 1.25%. So clearly the Nifty Bank pulling that little bit of pressure, and a clutch of other names also looking slightly wobbly. At the broader end of the spectrum too, a clutch of names have taken a tumble. Look at Fortis, for example. I'll just highlight one before I move it out, hand it over to Navneet. There's pain at the broader end, the mid cap and the small cap end of the market. And look at stocks like Fortis, which have seen some deep gashes as well. So there's a bit of volatility. India VIX surprisingly hasn't really gone up too much, just about 25-30 odd basis points the last time I checked. Yeah, this is India VIX, about 14 odd basis points. So not a dramatic increase in volatility in the day-to-day so far. And the volumes too have just about been par for the course. Actually, they were subpar at about 1. They've just picked up a little bit in the last few minutes of trade. This is, of course, the trading picture. And the volumes are now about at 21,000. We'll probably end the day at about 28-30 odd thousand crores on the NSE cash. What about the liquid universe, though, Navneet?
Well, Neeraj, the key concern today will be that we've crossed, in fact, we've breached the 10,500 session, and Nifty is now trading below that mark. Remember, in the last few sessions, the bulls were trying to protect the 10,500 mark. Hence, we were seeing a lot of put riding on the 10,500 strike, and that was the strike which was sitting with maximum open interest concentration. But look at the call riding which has come in for the 10,600 strike. In fact, that was the strike I was keenly watching out since the start of the day. That's added 22 lakh shares. But I guess in the last half an hour, the template seems to be changing now. The 10,500 is also added over 20 lakh shares. So let's see whether for the February series, the bulls can support the 10,000, defend, the 10,500 mark or not, because so far they were successful in doing so. But in today's session, Nifty has breached. And in case if we close below the 10,500 mark, the possibility is that there could be more sell-off, which could be seen in the expiry week. Well, I've already highlighted which are the strikes where maximum OI concentration is. Addition is on 10,500 and the 10,600 call. So watch out for these strikes. For Bank Nifty, weaknesses precisely because of the PSU banking space. Today is the fifth straight day that you've seen the cuts. In fact, for the week, the PSU banking index is now almost down 8 to 9%. So let's see where the closing comes about. In terms of stock futures, Neeraj has already spoken about Fortis Healthcare, but I was just looking at the data. The way the stock has fallen today, it's fallen on very high volumes in the cash side. So let's watch out for the delivery data there. In case the February and the March, both the futures have seen huge amount of OI build-up, telling you that there are fresh shots being seen. And I guess the counter is also off days low. At one point of time, it was down 9 to 10%. Now it's down about only 6%. The other one which has been under pressure post its December quarter earnings is Mahajan Sumi. In fact, today is the third straight day of the fall that you've seen for this counter, and huge amount of OI build-up has been seen, 12% higher. The underlying is also trading with cuts of nearly 4%. That's telling you that there are fresh shots which have been seen for Mahajan Sumi in today's trade as well, Neeraj.
Well, let's get you an expert opinion. Tushar Mahajan, Head of Futures and Options at Nomura India, joins us right now on the show. Tushar, good having you. Thanks for speaking to us at Bloomberg Quint. This is Neeraj here. Good afternoon. How are you seeing trade as it is shaping up? I mean, you know, every fall is being bought into, yes, but every rise is getting beaten into as well. And we aren't taking any positives out of the global cues as they have shaped up this week.
Yeah, hi, good afternoon, Neeraj and Navneet. I think it's a bit disconcerting the way the markets are trading today. You know, it seemed like for the last few days that we would hold on to the 10,500 level, and given the huge amount of support base which was getting created at that level, and in the absence of any major adverse global cues having broken it just today, on a week ending session, you know, it's also Friday, so on the weekly charts this trend would kind of look fairly bad. It's a bit disconcerting. I think all through this week we were probably getting signs that this was something which is going to happen, because the market was just not able to hold on to its gains, and every decent rise, you know, I think if you remember the last 2 days, intraday we were up almost 60 to 70 points on the Nifty at one point in time, or probably more, and then we ended the day with cuts or pretty much flattish. So clearly I think the trade has become a sell on rallies trade, but where it comes in terms of buys on dip, that level was 10,500, which has broken today. So we are going to kind of see where we close. I'm hoping that we close above that 10,500 level, because that's a close below that could be fairly brutal.
Tushar, the last 6 or 7 instances, I mean, from a technical perspective as well, the indices, at least the large cap indices, the Nifty and the Nifty Bank, have taken support at that 100-day moving average. We are in or around that cluster. So are you watching levels like, I mean, the reason I'm asking this question to you is because you mentioned that you are hoping that we close above the 10,500 levels. What if we don't? What if, say, we were to close at levels which are around 10,450 odd?
So I think a break below 10,500 is definitely going to open more room for downside. First levels, which I would say, you know, under 10,500 is going to be around the 10,280 odd levels, you know, which is the level where we made those panic lows around the early part of February, you know, when the US markets kind of started with fairly negative cues. So that's going to be a critical level to watch out for. But I think more importantly, a break below that level of 10,500, I think, is also indicating that, you know, there is persistent weakness which is coming through in the markets. For a large part of the time, you know, the increasing story in India has been, you know, increased domestic participation, you know, increased retail participation and all of that. And a break below that 10,500 levels is going to dent a lot of consumer sentiment on that space. You know, already a lot of mid caps already reeling like 20-30 points off their highs. So technically for the index also to kind of break below that level, 10,280 as a technical level, but I would then not be surprised if we get closing to the 10,000 odd levels. Having said that, I'm still hoping that, you know, last half an hour today, we pick up some action and, you know, at least manage a close above 10,500.
Hi Tushar, this is Navneet, and as we speak, the markets are off today's low. Nifty is currently around the mark of 10,483. Let's talk about the pockets from where the weakness is actually coming from, and that's Bank Nifty, which is also approaching the 25,000 mark. We've seen persistent weakness in the PSU banking space all through this week. What are the key levels that you would be watching out for Bank Nifty in case if we break the 25,000 mark, which is a crucial support for the index? What could be the next support for the Bank Nifty?
So, you know, just like I said, on the 25,000 and 10,500 were the critical levels for Nifty and Bank Nifty respectively. A break below that, you know, I wouldn't be surprised if we lose about 1,000 points quickly on that index, which would probably, in terms of, you know, which would probably match up with that 10,280, 10,300 levels on the Nifty. So 24,000 would be that next level, 24,000, 24,100 would be that next important level on the Bank Nifty. But, you know, I kind of keep going back to the same thing that I'm hoping that we make that up through the close of the session, 10,500 on the Nifty and 25,000 on the Bank Nifty.
And we've seen strength, at least in the February series, from the IT pack. Tushar, today also the Nifty IT is holding up in green, though it's off day's high. What sort of trends are you reading there in terms of individual stocks there or for the entire index, Nifty IT?
So I think clearly for the year, for 2018, IT has been a fairly surprise sector so to say. Even in January, a large part of the index movement was contributed by the IT sector, IT heavyweights like TCS, Infosys, and we are seeing that trend continuing into February as well. To my mind, we are clearly seeing, we've clearly seen action in terms of the fact that a lot of shorts who were in those space, they got covered, and people are going net long in that space. I think it's a reflection of the kind of fear which is currently prevalent in the market. So IT ends up being a good hiding space. Second, with this increased talk of global growth recovery, demand requirement coming in from the US back again, I think that's helping the sector as well. And I think most importantly, on a risk-off trade, if there is a sell-off in the rupee as well, that ends up being a good hiding place. So across the board, I think the story around IT, which was negative for most part of 2017, has now changed, taken a complete 180-degree turn with with the key stories around the sector turning positive.
Tushar, you would have anticipated that we cannot have a discussion today without talking about the newsmaker of the day, the week, maybe the month or the quarter as well. What did you observe of the trades that happened in PNB and within the PSU banking space by and large? I'm not asking out here for a recommendation, but more an observation on the kind of trades that would have happened and if you drew any inference out of that.
It's kind of tough to, say your inferences once everything has come out in the public domain. I think there was a fair bit of action which happened in the public bank space right through the last 3 months, first with the bank recap, then the banks giving up most of their gains. And finally, towards the end of Jan, when there was clarity which emerged in terms of, the capital requirements for different banks. It seemed like, banks were being given growth capital. Most of the story was out of the way. And, we were looking at a much cleaner startup on the public banking side. And given the backdrop of that story, I think, everyone pretty much loaded up on public sector banks, which has got a massive balloon fizzing, after this entire scam, which has come out over the last 2 days. And all those guys who've basically, taken value bets on those banking names are really shuddering as to what to do. And, we are beginning to see a lot of people dumping that stock. I think it's just a little painful to see what's happened in that space. And, in the clear inferences whether you want to really touch the public sector banks, because you don't know, despite all the capital that comes to them and all the measures that get taken with respect to the NPS, is there an end to that big hole over there?
Well, and it's showing in the way the volumes are in today's session as well. PNB is now down 5% and the volumes again northwards of 100 million shares being traded, 116 million shares traded in today's session too. Third day in a row, the volumes have been substantially high. Well, if that was not all, I think Tushar would want your reaction on this story too. But MSCI has slammed the Indian exchanges for severing ties with foreign peers. Remember, the Indian exchanges have decided or have been told by SEBI to stop sharing data with foreign exchanges to prevent volumes from moving abroad. And MSCI has now termed the move anti-competitive. Sajid Mangat, who joins us with the highlights of that MSCI statement as well. Sajid, what did you take away from that statement?
It took MSCI nearly a week before it could come out with a statement on the impact of the joint statement released by all the three exchanges. Remember on last Friday, all three exchanges came out with a statement saying that they will stop sharing the data with overseas jurisdiction, and as a result of which all the overseas trading that happens or offshore trading that happens will have to come to an end, and so that there is a concentration of volumes coming back into the Indian market. Now MSCI has termed this as anti-competitive. They have also gone and warned that this could lead to change in India's market classification. Now MSCI currently classifies markets into three buckets, which is a developed market, you have the emerging markets bucket, and then you have the frontier markets. Currently India is part of the emerging markets bucket with a weightage of nearly 8.3%. Now if you look at some of the funds who are tracking emerging market index very closely, we have roughly around $41 billion of assets which are pegged to the emerging markets index. index, MSCI Emerging Market Index there. And if you look at the ETF, which is iShare MSCI ETF, Emerging Market ETF, which trades very frequently in the US, it has nearly $3.6 billion of Indian assets. So there is a lot of risk associated, which has suddenly come into the into the MSCI Emerging Market basket because of this statement made by MSCI that there could be a change in market classification. To give a perspective, last year in June 2017, we saw Pakistan entering into the emerging markets basket, while there are countries like Brazil, Argentina and Saudi Arabia who are waiting in the ranks to enter the emerging markets basket. It takes a couple of years of discussion with institutional investors and market access, which has been provided to institutional investors, on the basis of which MSCI decides whether a country is part of a particular basket or not. In June 2018, again, you have Chinese A shares which will enter the MSCI emerging market basket again. That will be primarily because there is a connect now between Hong Kong and Shanghai, which allows stock trading between both the countries, and it allows more easier access, and Chinese government has allowed a little bit of leeway in coming out with products for the Chinese market there, and that's what push entities like MSCI on upgrading a country to an emerging market status there. Sure. Now, if this continues here and there is a change in review which happens in June 2018, sure, and India goes down to frontier markets, there would be outflow from India because funds which are tracking emerging markets will not be able to enter India any longer.
Right. Sajid, quick 20-second answer though. If you've had any chat with the MSCI officials, the change would mean a change downwards, right? In a scenario like this,
it cannot be upwards.
It cannot be upwards. Which is I'm asking you. But
it cannot be upwards. They have been very clear in the sense that the statement is made on the basis of their discussion with institutional investors, because they see that access to market has been restrained and in the offshore segment, and any classification of MSCI is based on how markets can be accessed, whether on onshore or offshore jurisdictions, and in this case the offshore jurisdiction has been curved, and so there may be an implication and a price which India may have to pay.
Thanks, Ajit, for bringing in all those details. And Neeraj, if that actually happens, that would also mean a lot of adjustments, because a lot of your trades and products are, designed around the MSCI emerging markets or even the MSCI India index. But Tushar, I would like to take this question to you. What have you made of the move that the Indian exchanges, all the three exchanges and SEBI have made to not share their data with the global exchanges, which they've also said that maybe 6 months down the line, we may not have Nifty futures being traded at Singapore Exchange?
So I think very clearly when the circular was released last Friday, it clearly seemed like this would have an implication on the MSCI and its reaction to the whole thing, especially because MSCI India futures also get traded on SGX, and even as a derivative product, they kind of derive their data from MSCI India, which will continue to receive the data, but the futures cannot get kind of traded on SGX. We were hopeful that the exchanges would already be in touch with MSCI with regard to that, and I believe that has also been the case. The letter which has come out yesterday from MSCI is clearly at this point a warning letter. So we have to take it at that. It cannot be it cannot be dismissed as just another letter. But I think I'm hopeful that at some point this exchanges and MSCI would be able to reach a solution to the whole thing, whether it is listing of MSCI futures on India in regard to allowing MSCI to be traded on SGX, or maybe a kind of a connect system between SGX and India, or SGX and the Gift City, which seems to be the underlying the development of which seems to be the underlying thesis for this circular. So it's a story which is unfolding. You would not dismiss it completely as of now as baseless. There is reality to it, but there's also almost like a 4-month time frame from now until June before the final decision comes, and you would hope that Indian officials will consult with MSCI and come up with a solution on the same.
Okay, Tushar, It's a pleasure having you. I believe you've spoken for the first time today, but look forward to have you more often on our forum. Thanks for taking the time out today.
Yeah. Sure.
Well, that's Tushar Mahajan with his thoughts on the F&O space. As we speak, the market's staying fairly flat, but a stock that's tumbled and then come up again is Fortis Healthcare. Now remember that the court has dismissed a plea filed by Malvinder and Srivastava Singh seeking to stay the 35,000 crore arbitration granted to Daiichi Sankyo. That is one. This comes a day after, of course, the Apex Court granted lenders permission to sell Fortis Healthcare shares pledged to them by the Singh brothers, which I presume would be a bigger draw for Fortis Healthcare. The stock, Yatin Johnson would tell us what the impact of both of these or one of these would be on Fortis Healthcare, the company and the stock as well. Yatin.
So Neeraj, importantly, two Supreme Court verdicts have come in as far as Singh brothers and Fortis Healthcare is concerned. Number one being yesterday's verdict, wherein the court allowed the lenders or the entities wherein the pledged shares of the promoter entity, Fortis Healthcare Holdings, were put, which means effectively that all the shareholding or all the pledged shares of Fortis Healthcare Holding, which were with the lenders, are now free to sell in order to cover up their overall loan amount, or if there is any default on the part of the Singh brothers. Of course, it is quite interesting to see how the market really reacted to this, because people thought that this would pave the way for a strategic investor or probably a potential healthcare chain to buy shares from the lenders. But what really has happened is there were 4 or 5 financial institutions which held the pledged shares of Fortis Healthcare Holdings of Fortis Healthcare Limited, and these entities were namely Axis Bank, Yes Bank, Ratnakar Bank, which is RBL Bank. We have ECL Finance, India Bulls Finance. All of these entities held the pledged shares, and now these entities are free to sell these shares in the open market to recover any kind of loans or interest which were due from the entity which is Fortis Healthcare Holding. And subsequently today also there was a plea or an appeal filed by the Singh brothers, which was rejected by the Supreme Court. This was regarding Daiichi's arbitration award to the tune of 3,500 crores, which now means that this 3,500 crores worth of arbitration award will be now enforceable on the Singh brothers. And more importantly, this is double damage for the Singh brothers, because on one hand we have the 3,500 crore arbitration award which will be enforced, and number two is that their majority of the asset which is now with the lenders will be sold in the open market. So it's probably a double whammy for the Singh brothers. Of course, what we gather from dealing rooms and sources, that probably one of the lenders might have sold the shares in the open market, and probably that is the reason why the shares from opening high of close to 151 tumbled to as low as 115 rupees, which is almost a 20-25% intraday volatility which has come in. And rest of the lenders, probably the large ones, since it's a 35% kind of equity, or 1/3 of the equity with the placed with the lenders, probably are negotiating with a potential buyer or a strategic investor, and probably we'll get more updates on that front in case we are having additional information on this one. But what at this point now we are gathering is that probably one of the lenders might have sold the shares in the open market.
Okay, Yatin, thanks a lot for bringing in all those details with regard to Fortis Healthcare. That counter has definitely been in focus, and we've seen a lot of short build-up also coming on the future side. It is off today's low, but still trading with cuts of 7% around the level of 132. Well, let's talk about Varun Beverages. That's the stock which is in focus, as the company has posted its December quarter earnings, where the revenues have jumped 21%, while the losses definitely have narrowed to about 73 crores. What have been the key factors at play for the company in the quarter gone by? Joining us on the phone line to discuss this is the chairman and promoter of the company, Mr. Ravikant Jaipuria. Mr. Jaipuria, good afternoon to you, and thanks a lot for joining us today on Bloomberg Quint.
You're welcome.
We've seen a 21% growth on the top line, Mr. Jaipuria, but for the quarter it's a loss, which definitely has narrowed on year-on-year basis. But I guess in the September quarter you guys had posted a profit figure. Tell us what has led to this sort of performance at the operating level, where margins too seems to have contracted.
You see, fundamentally, this quarter is a very lean quarter for us and has very little meaning, because we are a seasonal industry, and our most of our profits, practically 100% of our profits, come out from the first half of the year. So, and last quarter, which is this October-December quarter is the weakest quarter for us. But even though after that our losses have come down from 111 crores to 72 crores. And if you look at the full year, our net profit has expanded by 346% to 214 crores instead of 48 crores last year. This is partly because of our cost of interest has come down from 10.25% to 8.25%. Our EBITDA has gone up by about 5%, and EBITDA margins have improved by 30 basic points. So from 20.6%, it has gone up to 20.9%. And, last year was a challenging year for especially the beverage industry, because the GST came at a time which was our peak season, and all our distributors and retailers destocked the product. So we had a very bad, our main quarter, which is April to June, was a very soft quarter, and that could never be covered up in the following months, although we've been growing considerably after July onwards, after the GST has stabilized. And the other thing which has happened is in the last 4 months, we have been able to, Pepsi has given us 5 more states in the country. So we have acquired from other bottlers 5 more states, which are states of Odisha, Madhya Pradesh, Chhattisgarh, Bihar, and we are in the process of acquiring Jharkhand.
Right.
Now, these are all under-penetrated territories, and we expect in the next couple of months to stabilize it, and by the end of this year, they will start showing huge growth, and where we expect, and this, if you look at it, this is 21% of the total population of India, these new 5 states.
So, Mr. Jaipuria, good afternoon. Would this mean that for calendar year 18, I'm just looking at your calendar year 17 versus 16, your operational numbers have looked far better. The bottom line, as you said, is great. The top line hasn't shown that growth. Will it come about in 2018, or do you believe this will start showing effect only in 2019?
No, it will start showing in 2018. 2017 would have been good for us also, but due to GST, where in the peak month, all our sales got destocked. So that really hurt the company. So after July, we've been growing. Every quarter, we have been growing.
Yeah, okay, so what kind of, I know it's difficult to pencil in what would the bottom line number be at the start of the year, but surely you have some internal targets about what the revenue growth numbers could look like, or what's the percentage growth that you envisage or anticipate in calendar year 18 or calendar year 17?
Well, we definitely expect our EBITDA growth to be in double digits, top line also. So the season is looking good. The first 2 months are started well. So I think there's no reason why, and we have nothing. The next quarter, which is going to be our big quarter, April, May, and June, there is no GST coming this year. So I think we should have on a weak, soft quarter last year, it will be only good only. So things are looking very positive. And we have also started the distribution of Tropicana juices and even Gatorade, Lipton iced tea, and Quaker Oats. So those will also help the company in getting volume and profitability.
Mr. Jaipuria, in fact, I was just coming to the volume growth. So if you could give us some more details with regard to the December quarter volume growth, and what sort of growth are you envisaging for the calendar year 2018?
December quarter volume growth was 14%.
Okay.
And revenue growth was 21.4%.
Okay, which means you did take some bit of price hike also during the quarter, or no?
Yes, some slight price hike was taken.
Okay, just a last question from my end, Mr. Jaipuria. I wanted some clarification with regard to finance cost. I can see the yearly finance cost has come down by almost 50%. You said the cost of financing came down. So did you restructure your debt, or you paid also some of your debt?
Well, we paid all the high cost debts and restructured and borrowed at a lower price, and also repaid part of the debt with the the proceeds of the going public.
Okay. I'm guessing I heard you say that, Mr. Jaipuria, but just reconfirming, the Jharkhand and the Chhattisgarh bottling operations, you have closed them by end of January, right?
Chhattisgarh is closed. Jharkhand is in the process of being closed, so I expect it to be closed in the next couple of weeks. So by end of February, we are hoping it to be closed.
Okay, fair call. We wish you all the best for that and many more acquisitions as well, Mr. Jaipuria. Thank you so much for taking the time out and speaking with us today.
Thank you. Thank you very much.
That's Varun Beverages, optimistic about calendar year 18. We were speaking to McDonald's or Westlife earlier in the day, and they were saying that consumption patterns are only emerging stronger. Well, let's see if that is indeed the case. By the way, the markets are right now at probably the lowest point of the day. The Nifty Bank certainly seems to be at the lowest point of the day. Let's get in our experts on board. Shrikant Chouhan, Senior Vice President of Technical Research at Kotak Securities, Johnson. In a bit, we'll get in Sarvendra Srivastava. And then to talk about the fundamentals, Anand Tandon would be joining in as well. Gentlemen, all of you, thank you so much for joining in. Shrikant, just a quick perspective here on the key indices, all looking very, very wobbly. Would you initiate any trades for Monday on the short side on any of the key indices?
Good afternoon, Neeraj. I think, see, the way yesterday the market has formed reversal formation, today the market has clearly given continuation formation to the same. It failed to break the level of 10,620, which is a very crucial level for the market to cross. But here it failed, and since 6th of February, when we saw a terrific sell-off in the market, from that day, the market clearly failed to cross the 620 mark. And today the market has broken yesterday's lowest level. So one thing is very clear, that one can take very clearly short call on the market with a stop loss at 10,530, and we can expect 10,350 on the downside for Nifty. For Bank Nifty also the formation is almost similar, and here also we can take a short call on Bank Nifty with a stop loss at 25,350, and we can again expect 25,050 on the downside.
Okay, so that's a short call coming in on both Nifty as well as Bank Nifty. But Shrikant, what about individual stock trading strategies for the day?
See, based on formation and the way we are like almost at the day's lowest level, we are of the view that if we take one buy call, one sell call, then it would be prudent, because already we have seen a fall of 125 points. But yes, we can go short on Bharti Airtel, which is trading at some 420, 422 levels. Here we can keep a stop loss at 430, and we can expect 395, 390 on the downside. The stock has broken its continuation formation on the downside, so more likely that the stock will fall below the mark of 400. The other stock which we like is Sun Pharma, because the stock is holding around this 565, 570 level. Even the news flow is also pending for this Halol plant. At the same time, today's volume and last few days activity is clearly indicating us that the stock is currently reversing back from lows, and the chances are very bright that the stock will again retest the mark of 600. So here also the stop loss level is very nearby. With a stop loss at 565, one can look for adding long position in Sun Pharma, and we can expect 600, 610 on the high side.
That's a stock that's been doing rather okay for itself. The market, unfortunately, not so. And we look likely for now, very likely to close sub the 10,500 mark. Let's get in Anand Tandon with his thoughts on the markets as well. Anand, if we were rejoicing at the fact that the other markets fell 8-9% and we fell only 3.5%, we have to take the other direction as well. We've been ending in the week in the red, whereas the rest of the world is ending in the green. There is a dichotomy probably brought on by what's happening within the banking space.
I don't think you can make a one-to-one correlation on the exact amounts of rise and fall. We also went up less in the month of January than the rest of the emerging markets. And therefore, if you fall a little less, I don't think there's any cause for celebration. The main point I think one should note is that the direction seems to have reversed. And from being a buy on dip markets, perhaps it is now a market where people are looking to get out if they get a better price.
In fact, Neeraj, this is the first time that the template seems to be changing. Every time the markets used to fall and there used to be some recovery. But this week, we've seen an opposite trend actually. On every pullback, there have been some short positions which have been seen at higher levels. Well, let's also bring in Sarvendra Srivastava, independent market expert who is joining us right now. Hi, Sarvendra. Good afternoon. How are you approaching both Nifty as well as Bank Nifty? We've seen sharper cuts coming about today.
Yeah, very good afternoon. No, I think the approach remains the same. We are what we had suggested over the last many weeks. The approach remains same, that we are probably headed lower, and for the Nifty we are probably headed lower all the way till 9,700, 10,000. That's the target range. That's the second target range. Our first target was at 10,400, which has been met. So when we initiated the trade, so by and large, I think this weakness will continue. And yes, as it was being said rightly, the nature of the market has now probably shifted from a buy on decline type of market for the last couple of years now to probably some people wanting to sell a bounce. I don't see many people still selling. Volumes are missing, but yeah, at least some people have come out and they are probably wanting to sell this bounce. So for Nifty, those are the targets. For Bank Nifty, I would say we would probably end up close to 23,800, 24,000 by the time we end up close to 10,000. So that would be a comparable level for the Bank Nifty as well.
Sarvendra, so to be fair, you've been short for a while now, but what about fresh trades? I mean, are you initiating any fresh short positions at the current levels? Because your view is negative. That I know very well now. But is your view negative for the near term, for the next 3 or 4 sessions? Are you making any bets thereof? Couple that up with stock-specific recommendations for the day today as well, Sarvendra. Good afternoon to you.
Good afternoon, Neeraj. No, absolutely. I think Nifty we will maintain the strategy. The only thing is now, in a larger decline, it is always better that when your targets are pending, you just keep on trailing your stop losses and stay put in that position. So what we initiated, and then we had a stop loss above 11,000. We got that stop loss down to 10,800 odd. Now we are saying that keep a stop loss on a closing basis at 10,726.60. I think the graphics might be wrong. There's been a typing error from my side. But I'll specify the level. The stop loss now is trailed to 10,726.60. Maintain targets at 9,700, 10,000 on the Nifty. Anybody wanting to short fresh now, probably will have to wait for a 50, 60 point bounce so that you probably short close to 10,500, 10,530. There you will get a decent risk reward. Right now, I think someone wants to short. I think fresh risk rewards are not there on the Nifty. But coming to stocks, I think clearly there are lots of risk rewards. Stocks breaking their long-term 200-day averages and then pulling back. So that's the basket that broadly we have picked from today. The first one from the tire space, which is CEAT. I think clearly broke its long-term 200-day average, gap down there, and now a 7-8-day pullback getting sold into today, and decisively so. So my sense is that the stock could head towards 1570 on the downside next 3-4 sessions. Keep a stop loss at 1672 on CEAT. And these are spot levels, mind you, all my levels are spot levels. And the next one is JISL, Jan Irrigation. I think there also we are looking in for a target around 102 on the downside. Keep a stop loss at 125.10 is what I would recommend. And again, a classic case here again, Bata. Clearly a nice medium-term topish pattern, break of that pattern, and then a classic pullback, and that pullback getting sold into. So I would say I will short sell Bata for a target of around 650, 660 on the downside, which is probably the recent lows that it printed in the panic crash, and keep a stop loss for that short at 736.60.
At some point of time, we'll also try and show you via the Bloomberg terminal the RSIs for a lot of these stocks, and you can clearly see they're finding support at key levels, then moving up, and then again finding resistance at those levels. So from a technical parlance, I think those levels would hold true. Some point of time in the show, we'll also try and show you some of those charts. But Anand, come in. So I was not trying to make a one-to-one correlation, Anand, just the fact that if the Dow and the Nifty have this 0.55% correlation, the point I was trying to make was that we didn't fall as much, and therefore we are not rising back in the same fashion as the global markets are. But that notwithstanding, the question mark before everybody would be that if the template is indeed not buy the dips, I don't know whether it's a sell on rally or no from an investor's perspective, but from an investor's perspective, the template is not buy on dips right now. Would it be prudent to sit on the sidelines and wait for the dust to settle? Because it's not just about what's happening to individual valuations. The banking space definitely is putting a lot of pressure on the benchmark indices too.
Well, we have the ability to drive a nail in our own foot, and we keep doing that. We have done that yet again, whether it is knocking off SGX and refusing to give them data, or putting capital gains where it was not required, or a whole variety of other import restrictions which the government is doing to essentially close down the economy. But with all that, the fact of the matter is that we are still seriously linked. And if actually as an investor, if you are not selling the rallies, then you are not an investor, you are just a trader. Because the only rationale for being in the market so far was the fact that, oh, there is money coming in. You know, it takes 2-3 months for an SIP to be shut down. What I'd like to see is how many people continue with an SIP if the market were to remain weak, let's say going into May, June. That is when we will really test the theory that has been going around, I think in my mind mistakenly, that there is some kind of structural shift that has happened towards the asset allocation. And the only thing that was holding up the market was this unprecedented inflow of money into the capital markets from all and sundry in the domestic market. The foreigners had stopped coming in droves quite some time back. So with the valuations that we have, you know, today in the morning I saw a note somebody sent me saying, you know what, one of the big brokerages is coming in at 40 and therefore the next one should be traded at 30 times. That itself tells you that a highly cyclical industry like brokerage, if it is going to be traded at 40 times, what is the state of the market we are in? The right valuation in my view should be 5, not 40. But, you know, so if you have a 20% correction, that is pretty much peanuts. You have to be looking at the mid-cap indexes falling by half and the large cap by at least 30% to come anywhere close to a justifiable range in terms of valuation. We are nowhere close to that yet. An investor has no choice but to sit out and wait for a better rate, or now put money into the short-term debt funds, because you're going to get a very hard tightening as we get into the end of March. There is no case to be made right now as an investor to be looking at this market on whether on growth or valuations.
So is it a time-bound correction, Anand, or is it a value-based correction? I mean, are there levels where, I mean, you know, for people who don't mind bearing a bit of pain on a time-wise basis, but wanting to look at levels which could give value to the market? Because, I mean, the other side of the story certainly is, Anand, that we are seem to be on a track. Let me not use the term are. We seem to be on a track of earnings revival. Q3 was probably an example of that. What levels do you find value enough for people to start exploring reinvesting options again?
So the good part is that we have a very wide variety of sectors, and consequently, you know, the companies will not all come down at the same time or don't need to. You will have, you know, rotation across companies as they correct, across stocks as they correct. And many of the smaller companies, for example, have actually come down 20-30%, and therefore maybe now in the value range. So surprisingly, I find that actually, you know, much against the normal wisdom that when the market is contracting, you should be actually looking at large cap, which is correct from a point of view of a very large investor. The fact of the matter is that the corrections that have happened in the smaller cap space. So if you are looking at value and growth equation, you'll find that actually you may be able to justify buying a small cap company, even though it is going down because of the illiquidity that is suddenly arisen in the market, rather than in the frontline indices. So it's a little difficult to answer, you know, exactly where, but from a sectoral point of view and sticking to the index as a benchmark, clearly the NBFCs is the largest, you know, place where the maximum bubble is, in my view, and therefore can fall the most, followed by perhaps some of the other banks, especially those which are lending against no collateral. The places where you will go back and look for value, where if and when it emerges, will obviously be those where there is still some chances of growth, and that essentially means infrastructure related companies. And given that inflation will likely rise for the next few months, you know, some of the FMCG stocks may do reasonably well as well. However, if you look at the overall macro picture, where the growth is coming from in this year is actually from the metals. You know, automobiles, metals are the ones that are actually going to show the growth. So obviously from a portfolio construction perspective, you have to keep in mind that the commodities, especially the hard commodities, is one of the places that you need to be in.
Okay. Well, we've made fresh lows also for the day. 10,434 was the low Nifty made at least, and a bit of recovery from those lower levels. But these are sharper cuts at a time when the cues from the global markets, the handover from US was positive, though majority of the Asian markets today morning were closed. But the European markets were definitely on a good start. 10,443 on the index. I just want to pull up PC Jewelers. That stock's seen some sort of action in the last 5 to 10 minutes, I guess. Yeah, that's trading almost at day's high with gains of nearly 7.5%. And IT is the other pack which was showing some bit of strength throughout the session, but it's selling across the board. So if you pull up the Nifty IT index, I think that's also flattened out for a day after gaining almost 1.5 to 2% in trade. So as we speak, Nifty IT is also just about trading flattish. Anand, view on IT at a time when we are seeing a bit of selling pressure coming across the board. Can this space give you some sort of cushion in terms of your portfolio?
Well, I think, if you assume that the paradigm of currency will shift now, and at least over the next 12 months, from a generally flat to stronger rupee to being slightly weaker, I think you will have currency tailwinds. And the bet that one is taking essentially is that the global markets, especially the US, which are showing signs of life, will actually show some growth. And that may actually bring the IT demand at least to the higher single digits, if not the double digits. So broadly speaking, given the relative valuation, the quality of earnings, and the kind of business you are in, I think IT will grow at maybe at least the mid-cap IT can grow double digits, a mid-teens kind of thing, whereas the larger cap will probably go in the single digits or at least or just about double-digit growth. So if you're not looking at a very challenging kind of year in terms of business, you are also not looking for something which will, where the market will run away. So on a relative basis, broadly, as I said, better business prospects, tailwinds in terms of currency, no reason to assume that IT will not be at least neutral to outperforming for the rest of the year.
Okay, by the way, just looking at the Nifty 50 names which are coming off, SBI is down about 3%, but Eicher Motors is down 4%, and that's the top loser on the index. Maruti is at 8824. That, while we talk about strong stocks, Maruti's corrected almost 10 or 11% from the recent highs that it clocked in as well. So a lot of these index heavyweights and the auto space too are under pressure. Shrikant, Chouhan, any thoughts here? Eicher Motors, which is down about 4%, or a Maruti about 2%. Would you take trades here?
I think, Eicher Motor is very clearly into downtrend, and it is failing to form any higher highs. In fact, it is forming lower high, lower top kind of formation. Again, from here also, if there is a very clearly negative downtrend, then this stock is again going to cross or break its previous low, which is around 26,200. So even at this price also, one can look for adding some short position on Eicher Motors with a stop loss close to 27,700, and we can expect 26,200 on the downside. For Maruti, my view is that it is like a very strong stock and if the stock is having very strong uptrend, then there is no point in shorting it. Instead of that, if we look for adding some long position close to its previous support, then I think that would be prudent. So previous low was close to 8650, 8600 levels, and currently it is trading at 9000. So in case if the stock is 8800 levels, in case if stock is available at 8700 levels, then certainly one can look for adding some long position around 87 with a stop loss at 86, and we can again expect 9000 on the higher side.
Okay, that's the view on Eicher as well as Maruti, which have seen sharper cuts in today's session. Well, but couple of your cement stocks like ACC, Ambuja, they've shown strength in today's session. Both of them have been trading in the positive. In fact, as we speak, Ambuja is the top gainer on Nifty. Let's see if our next story has any relation to that. Cement prices have been rising over the past 3 months, and while the quantum may not be too large, it's significant because it seems like the cement makers have finally got back their pricing power in an all-India basis. Let's get in Nikki Mirchandani to find out how exactly the prices have gone up in the last quarter or so. Nikki, over to you.
Thanks, Navneet, for that. Cement prices have been uptrend since November that we've seen. Right, December, Jan, Feb, you can see the price hike. This is rupees per bag that we're talking about. If you see from May to November, we saw a downtake, but then now, past 3 consecutive months, cement across all India region basis, we've seen price hike coming in. Also, the price hike has been dominated by both your eastern as well as a central region. If we could pull up the chart which says the northern region, that's the first region that we have. If you look at the chart, you would see a decline coming in at Jan and the prices remaining pretty much flat or stable. Now remember, there was some petcoke ban issue which took place in the month of December, because of which you saw the prices go up, and then there was a rollback and now they're flat for that matter. We saw a sharp hike coming in the central region. Now the prices there have been on uptrend. In fact, there has been a pause in the previous month, but overall if you look at the trend for the central region, it's been a pretty much buoyant picture there. 6 rupee per bag hike here, flat, and 7. And also some imitating somewhat a similar trend. Eastern region too has seen a price hike, ₹5 per bag on month basis. This is the price hike that we're seeing. We're seeing a hike in Odisha and Bihar. However, the price in West Bengal for this particular region remains flat. Now West on the contrary sees a muted trend, though we have seen a meaningful increase in Gujarat, but then the decline in Maharashtra pretty much offset for the gains that we've seen for the region. South also, there is a flattish trend which continues for a region as a whole, but then do bear in mind the fact that we've seen a sharp uptick here in Jan in terms of rupees per bag on month basis, and that's why this flatness probably is creeping in. But then having said that, having concluded that the price hike have been past 3 consecutive months, but then the pricing power as a whole for cement companies is not up to the mark, because it's a seasonally strong quarter for the company. If you look at the quarterly performance, we're looking at on year basis, the price hike is around 3.5%, and on quarter basis, the price hike is just 2.2%, which doesn't hold well for the company. Most of the companies in Q3 FY18 in fact reported weaker realization but higher volume on back of these weak pricing power. Back to you guys.
Thanks a lot, Nikki, for bringing that interesting piece of analysis. Anand, I'll come to you on this packed cement. Couple of earnings actually surprised, especially ACC on the volume front, which was quite a buoyant figure posted by the company. Ambuja is the only nifty company actually which is left to come out with the earnings. But how should one approach the cement space if somebody wants to take a call? Where would you bet, the large cap or the mid caps?
Cement has been something which has been threatening to do well, but has so far failed to deliver in any substantial way. The volumes will pick up sometime during the course of this year and next year, I guess. So I think it is still a 12-month story from now before it really starts to perform, at least in terms of actual performance. If you are looking at large cap, to my mind, most of them are fully or more than fully adequately valued. And therefore, from a purely valuation perspective, the upside seems to be either in those companies which have been consolidating and growing, like the Dalmia Bharat, for example, or in the smaller companies where if and when the prices actually firm up and volumes pick up, the delta in terms of earnings can be the largest.
Okay, Sarvendra, just want to get a technical check on Ambuja Cement going, because that's been quite resilient in today's trading session. On the charts, does it indicate any sort of trade that one can take?
See, for the whole cement space as a whole, I think broadly over many quarters, I think we've not been able to decisively go past 15, 16 highs when the market actually took out that high, which was 9119 high decisively. I think we've kind of on that space, we've not gone anywhere from that 15, 16 high for any of those stocks. And I'm talking about the leading names, especially ACC and Ambuja. So my sense is that with the break on Ambuja of the long-term 200-day average, which is already in place and it's been kind of consolidating below that for the last 4-5 sessions, I think any bounce, or any 5-10 rupee bounce from here probably will add on to the risk reward. And I would say that people can then probably look at shorting it for a target of around 240, 235 on the downside with a stop loss kept above 280. But let it bounce another 10 points and then probably a short can be initiated. My sense is the entire cement space probably is headed down along with the market.
Okay. Gentlemen, stay on, so much more to talk about. Take a quick break here. On the other side, we'll tell you the Fab 4 stocks of the day today, what dealing rooms are recommending in the session today, and some closing strategies from both our experts. And that, some final thoughts from Anand Tandon as well. Stay tuned.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. जिंदगी के साथ भी, जिंदगी के बाद भी.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Back with the countdown right here on Bloomberg Quint. The Nifty Bank down 245 points. Yes, 245 points. India Bulls Housing leading the pack down. Yes Bank, SBI amongst the top losers, and ICICI Bank, I think, amongst the top heavyweights, which have come off. Just wanting to see some stocks that would have gained or lost. I think some change in technology names, and I think Infosys actually climbed the ranks a bit, so some bit of defensive buying probably coming in order. Look at Infosys as a stock, just seeing a bit of a stir up in the last few minutes of trade. But by and large, the mood remains slightly somber. The cuts at a clutch of mid caps and small caps are fairly large, and the volumes too fairly high out there. Anand, while the mood is somber, if I heard you over the last half an hour, I would presume that you believe that due to valuations, due to maybe possibilities of liquidity taps turning off a little bit, there is a higher probability of we moving lower from where we are right now. But this earnings season would have given you some reason to cheer as well. I know you spoke about certain pockets, but if I were to ask you about one non-index pocket where earnings surprised you from based on what you were expecting, what would that be?
Well, I haven't thought about that, so it will take me a while to get my heads around that kind of question. But, broadly, yes, the numbers have been a little better than expectations, marginally so, in terms of where the index earnings are. But, you are still going to look at an overall Nifty growth or Sensex growth, which is still single digits, which means that next year, for you to deliver on a 18 to 20% growth, which is where the market is still not going to be, a walk down the path.
Well, okay. You would pencil in lower earnings growth for FY19?
Well, it's going. The fact of the matter is that there were 2 or 3 pockets, as I said. Commodities, The question is, if the dollar starts to strengthen, which is something that should be happening, then commodities will weaken, and I don't know how far that can go, and that may put some pressure in terms of the commodity realizations. The other big pocket where the earnings growth was supposed to come was PSU banks. Clearly, I think that is now a pipe dream, right? So almost 17% of the incremental earnings growth that was supposed to happen between this year and next year was supposed to come from PSU banks alone. Now, if you assume that that is not going to happen, or it's going to happen substantially less, that will translate into at least 2-3% off from the index earnings as well. So I think there are some assumptions that are being made which are somewhat which require a stretch to be able to be achieved. It's not as if, as I said, it's not going to be very easy to do that. So I wouldn't be very surprised that if by the middle of the year you come down to 15% expected growth rather than the 20% that is right now being penciled in.
Okay, Anand, we'll let you go on that note. Thanks a lot for joining us today and giving us your views on the markets. Well, as we speak about the markets, Nifty is still trading with cuts of over 90 points. 10,450 is the level, and Bank Nifty is seeing sharper cuts, actually down almost 270 points. But in a market like this, let's check with Yash Upadhyay if he's managed to find any Fab 4 stocks of the day. Yash, over to you.
Well, it's been a difficult day, Navneet, but nevertheless, we've got Vakrangi featuring on our list for a second time this week. The relief rally that it has been on, the stock has gained close to 28% in the last 5 trading sessions and has in fact been locked in an upper circuit of 5% for a 5th day running. We're also looking at PC Jewelers. Now, jewelry stocks were under pressure yesterday, with PC Jewelers correcting as much as 5%. However, the management of the company came out with a clarification yesterday stating that it does not make use of any letter of credit or letter of undertaking for its business transactions, and in fact it buys all of its diamonds from the local market on a cash basis only, and it is up about 7.5% as well. 8K Miles was at one point in time the top gainer on the Nifty 500, gaining close to 8.5%, but has given up on those gains and is sitting and is up almost 2.5-3% after the company announced the launch of its latest blockchain platform technology called 8K Health Edge, which is used to provide real-time solutions in the healthcare space. And finally, we are also looking at Indoco Remedies. This one too was up about 6.5% after the company said that it has received the European Union Good Manufacturing Practices certificate from the Regulatory Authority of Hungary, which means that it would be able to sell its products in all of the European countries. Back to you.
Thanks a lot, Yash, for giving us those Fab 4 stocks of the day. But there are a lot of losers. Look at Jindal Steel and Power. If you could just pull up the intraday chart of that, it's now your top F&O loser as well. JSPL has fallen almost a day's low, down almost 6%. Besides that, Century Textiles, Motherson Sumi, all these stocks are not having a good day. In fact, especially for Motherson Sumi, it's down for the 3rd straight session. What else has come under pressure? Sun TV, Apollo Tyres, Raymond, all these stocks have seen cuts of nearly 5 to 4%. Okay, let's bring in our next market expert, Mr. G. Chokkalingam, founder and managing director at Equinomics Research and Advisory, is joining us on the show now. Hi, Mr. Chokkalingam. Good afternoon to you, and thanks a lot for joining us today. What have you made of the correction that one has seen in the last 3 to 4 sessions in the PSU banking space? Would you use this as an opportunity to do any sort of bottom fishing?
In fact, I am waiting for a few more days. Definitely, the PSU banks have corrected a lot. Of course, half of them deserve it, but certainly some of the banks don't deserve further punishment, because out of around 27 listed PSU banks, still there are 3-4 banks which are having a net NPA less than 4-5% and able to grow the business also. So definitely we would start sometime next week, because what I learned is that when some sort of crisis comes, it doesn't die down, within a day or two. A lot of news flows follow it up, and more and more damages are normally done whenever such a major crisis is blown up. So therefore, I would wait for at least another 3-4 days, and then I would certainly start looking at 1 or 2 quality PSU banking stocks.
Mr. Chokkalingam, which stocks would you look at?
Yeah, certainly, stocks like Syndicate Bank, to say, and even Vijaya Bank. Among all the PSU banks, it is the cheapest, and it is still growing the credit when many banks are already growing. And even in price to adjusted book value, there are only few banks which have got a price to adjusted book value in a positive territory, which means many banks, their net worth is less than the outstanding net NPA. Whereas for Vijaya Bank, it is net worth is still substantially above outstanding net NPA. So it has got all quality parameters, in place. And this one bank, I would certainly look at.
Okay, and Vijaya Bank is actually bucking the trend in today's session. Its off-day is low. It's just turned green now, 58.4. Shrikant, I wanted to get your technical view on Mahajan Sumi. That counter is weak for the third straight session. Post the numbers, we've seen a lot of profit booking or selling, which has come in Mahajan Sumi. At current levels, is there any trade that one can initiate? Or let's say if somebody had taken a short, are these levels good enough to cover their shots?
I think, see, the stock has fallen all the way from 395 to 319. So when the market was up, that time also the stock was down. So I'm of the view that now the stock has completed almost 40% of its entire rise, which it has started from the levels of 185 to almost 395. So now I think the stock is like very clearly oversold. Yes, because of there is a weakness in the market, we may see some more weakness in Mahajan Sumi. But I think it is better if we cover our short positions. And if there is any further more decline, then close to 300 levels, where the stock will enter into extreme oversold territory, that time one can take a contra call of going long. So at this point of time, I think my view is to take profit on any short positions.
Okay, so take profit on the short positions if you have any on Mahajan Sumi, but just 20 minutes for markets to close, to be precise. It's 3:10. Let's get you some F&O stocks that could enter the F&O band for Monday's trade. And there are two stocks which do feature in my list for today. One of them is Fortis Healthcare, a counter which has been in focus, in fact, all through the day today. It has gyrated nearly 11 to 15 points if you look at it. Fortis Healthcare, yesterday, the total open interest as a percentage of market-wide position limit was nearly 89%. And there's been a huge build-up if you look at the February and as well as the March futures, which indicate that the stock may cross the 95% mark, which is required for a stock to enter into the band period. So watch out for that stock. The other one on my list is Dewan Housing, 86% OI as a percentage of MWPL as of yesterday. And both the February and the March futures in today's session have seen aggressive open interest build-up, which has come in for Dewan Housing as well. And remember, Dewan Housing was quite active actually this week. So watch out for this counter if they enter into the band period. And Sarvendra, I'll come to you to take your view on Fortis, which has been quite weak in today's session on the chart. What would you suggest? Because we've not seen any sort of pullback which comes in Fortis Healthcare gets sold into. What's the next support level that one should watch out for?
So I think this particular stock, I think, is best avoided. It's not in regular coverage as well, but I think can be best avoided with so much of developments in this and the kind of volatility. I think viewers would not be able to manage it. The kind of volatility, even professionals can't manage this stock the way it's been moving over the last 6-12 months. So I would say it's better avoid. No clear trades here happening.
Okay, it's actually off day's low. There's been a sharp recovery which has come in for Fortis Healthcare. It's now down only 3% from being down about 10%. Mr. Chokkalingam, are you looking at the IT pack, which has been resilient actually in the recent correction that we've seen for the markets, either the large caps or the mid cap IT stocks?
Yeah, definitely. We played successfully on mid-size IT companies. Still, I find great opportunities there in stock like Gensa Technology. You know, we have done a comparative analysis of all mid-sized IT company. Gensa Technology trades at 1.4 times enterprise value to sales. I am stressing on this enterprise value to sales because a couple of companies are already taken over. You already seen acquisition in the case of Polaris, Emphasis, and earlier, Patni Computer. So all these acquisitions were happening anywhere around 1.5 to 2 times, whereas Gensa is now trading at 1.4 times enterprise value to sales. Even in terms of PE method, it is one of the cheapest stocks. It is just trading at around 14 times, 1 year forward earnings. And very interesting point is that now there is a lot of talk on digital platform, and Gensa already has got 39% of the revenue coming from digital platform. And lastly, this is one unique company. Most acquisitions in IT space happened because foreign investors have acquired, whereas only in the case of Gensa you could see the Indian company acquiring smaller other IT companies. So this is a way the Gensa is scaling up the business through inorganic route as well. So considering all these facts, I like Gensa Technology most among all listed mid-sized IT companies.
Mr. Chokkalingam, target of 1,000, but what's the time horizon?
I mean, this market, it can even hit in 6 months. Again, 1,000 is a very conservative. If somebody is willing to wait for 2-3 years, I believe the stock is worth even 1,500. That's what happened to, Polaris. In fact, we exited Polaris very early. But the kind of valuation we are seeing for Polaris, Emphasis, it's mind-boggling. If this company has to match even 3/4 of that kind of valuation, this stock is worth at least 1,500. So the 1,000 rupees is a conservative for a short term.
Okay, it's almost 3:15, that time of the show when we get your dealing room checks going. What are the dealing room recommending in today's session? Yatin Mota and Darshan Mehta join us on the show now. Good afternoon to both of you. Darshan, over to you first.
Yeah, so one of the stocks that's been spoken about, Navneet, today is Prakash Industries. The counter is flat in trade. It's come off the day's high. But the news that came in, in terms of the morning, in terms of the promoters allotting warrants to themselves, that's taken a lot. That's taken on the positive side by the dealing rooms, indicating that pretty much at this point of time, 208 will mark the bottom of the stock where promoters themselves are accumulating. So that's the first stock that dealers are talking about. ACC again today, cement counters are doing well. You just heard how a cement price hike was taken for February, a 3 rupee increase on the month of February. Overall, there seems to be traction among the cement stocks, and ACC has been spoken about. And the last stock in which dealers indicate that some of the HNIs are selling today are the high beta counters. So Century Textiles is where there seems to be a lot of short positions that are being built. Some of the HNIs are booking profit, and some of them are even shorting the counter, given the fact that the market looks extremely volatile. But Yatin, what are you hearing?
Darshan, Nestle, that is one stock we spoke about it yesterday as well. Dealers indicate that there are flows on the positive side as far as this FMCG giant is concerned, and dealers recommend a buy today, sell tomorrow kind of a strategy here. Fortis, and expect the counter to be volatile because dealers indicate that a lot of pledge shares have been sold in the open market. Of course, we had almost 20-25% kind of a intraday volatility which came in the shares. Of course, opening higher by 4-5%, the shares dipped as much as 15%. So dealers expect the volatility to continue here, and do watch out for Raymond's, as a lot of HNIs have been said to unwind their long position in the F&O segment. So Raymond is a stock wherein probably dealers expecting some trading downside to happen.
9:29 and counting. A clutch of these names have come off in a hurry. Yatin, many thanks for putting that into perspective. Well, you spend the last few minutes reading up what some of the global investors by and large are seeing, and everybody's talking about how the overvaluation stretch now seems to be imminent. Keep in mind, Ray Dalio, for example, I know that in the Davos forum, he spoke about how there is people who are holding on to cash might feel stupid at the end of it. But just as recently as 36 hours ago, he's changed his stance a bit. He's upped his short positions on European equities, certain European equities, to a significantly large position, and doesn't seem to be extremely bullish on the markets, if at all. I think his basis is that there'll be a faster tightening than what we are accustomed to, or what we might be thinking right now, and that could actually be an important determinant in the exact timing of the top in stocks. But people across the world are talking about top in stocks, and not for India, for the global markets. If that were to happen, there's no saying that we will not get impacted. So just got to keep these things at the back of your mind. Don't just look at our own valuation parameters and the SIP flows. That alone may not be a determinant of what happens to our markets in a scenario when there is a bit of a shake-up, if I can use that term, that happens. Just wait and watch. Be careful and monitor all of these things closely. 10,455 currently on the Nifty. The Nifty Bank 2 down. And just, okay, my producer is asking me to look at the stock of PNB. We should pull that stock up as well and just see what that is doing. Well, it's a sharp recovery there. Navneet, I don't know. I don't want to ask any of our experts about how to trade a PNB, because there is a very high probability that no matter how good you are, you could go completely wrong on giving a call on PNB in tomorrow's session or on Monday's session.
It could also be a Friday factor. Neither the stock is down almost 8 to 10% for the week. Maybe the traders may not want to roll over their position for Monday, and they could be booking their profits. So this probably could be a short covering rally that you are seeing for Punjab National Bank. But
no, I think LIC has given out some flashes as well. Plan to maintain current stake in PNB despite
the
fraud. I think this is probably one reason why PNB is doing what it is doing. Though it's not talking about buying further stake. And they are saying they'll maintain the current stake in the PNB despite fraud. But I must...
That's just to maintain some sort of, I don't know if whether it's positive for the investors, existing investors, but nothing changes fundamentally for this bank now.
Well, nothing changes. It's just that it's difficult to pinpoint, Navneet, what could happen, because one, we know the extent of the fall, which would be 11,000, but 11,000 odd crores or the money siphoned off, but you don't know how much of it will be justified claim, unjustified claims. Some of those claims PNB might be able to defend well if they go down that route. Having said that, after that happens, you don't know whether the money that has come in via recoveries from the Nirav Modi camp, what the extent of that money will be, because that reduces that hole. Whether PNB is able to divest some of the holdings in PNB Housing Finance and some of the others and fill up that hole as well. So it's very difficult to take a guess on what's the eventual hit that PNB will take. The only thing is people don't like uncertainty, and definitely don't like uncertainty in a scenario like this, wherein a clutch of other names are available at such a better price. So LIC might maintain the stake. Will we see too many people going out and buying PNB because it's available at, well, perceived bottom valuations? I think the answer to that would probably be a no. Mr. Chokkalingam, at 126, or let's say the scenario stays as is and the PNB stock drifts lower to 110. I don't know if you've done some math here, but if you have, would you be comfortable buying a PNB at 110, ceteris paribus, everything else remain as it is, as we know today?
Certainly around 110 I would buy. I have done the max on the stock. The net worth is around 35,000 crore. Net NP outstanding is 34,000 crore. So there is still 1,000 crore surplus. Now on this 11,000 crore hit also, there are reports of the government agencies seizing a property worth 5,000 crore. Obviously, those properties ultimately have to come to PNB. Assuming that kind of scenario, I think at 110 level, it's a good buy, no doubt at all. Because another very interesting fact, which I mentioned earlier, out of all the listed PSU banks, there are only few banks which are able to grow their credit. Most banks are having a degrowth in the credit. My logical point is that when you have the stress and business is also degrowing, you can't come out of the stress. But fortunately, PNB has reported a very decent credit growth in the latest period. So considering all these facts, I certainly, close to 100 or 110 level, I would be an aggressive buyer.
Okay, so around the 110 mark, PNB can be an attractive buy. Remember, the bank is trading around 0.6 times to its book value now. Majority of the PSU banks are actually trading below the mark of 1 when it comes to their book value. But it's 320. Let's just get you some closing strategies going from our technical experts. Shrikant, I'll come to you. Anything that you're spotting on the charts where one can take a BTST or a STBT strategy?
I think we should stick to a view of trading short on weak stocks like Bharti, which is trading at 420, 421. And if really somebody want to take a buy call or contra call of going long in this market, then I think JSW Steel, which is closing at its highest point of the day and the 52-week highest level. So there one can take a call of going long and taking contra view in this market. See, most of the time, whenever there is a range-bound kind of activity and overall sluggishness for the day, there if we take a contra call, then it works also. So currently it is around 313. One can buy with a stop loss at 309, and we can keep a target of 320, 322 on the higher side.
Sarvendra, what about you?
Yeah, I'll go with an STBT. I'll pick from the weakest of the space, which is the banking space, especially private names. I would go with Yes Bank. The way probably the volumes have expanded into this decline, and I'm giving cash levels here. I think right now it's around 312.50. I would say that 305 is doable, 305, 306 is doable in the session next. And if I have to short sell that, then I will keep a stop loss at 316.60 and take a STBT short for a day.
Okay, so those are the trading strategies from our experts. And well, we were speaking about LIC's stake in PNB. That's nearly about 13.9 is what the December exchange release shows LIC's stake in PNB. Not only that, I guess there are some foreign shareholders who hold stake precisely to be, you've got Lazard Emerging Markets Equity Portfolio, which has stake of nearly 2.2%. But Mr. Chokkalingam, anything from the metal space, which so far has been outperforming, not only 2018, since 2017, we've seen a good rally from most of these stocks. In fact, yesterday we had Hindalco also, which saw good gains. But on these corrections, we've seen JSPL, Steel Authority stocks, which so far were underperforming, started to do well in the last 3 months. Would you like to pick any of these stocks at lower levels?
Definitely, as you said, the stocks have rallied a lot. Maybe there is some correction. One can look at Tata Steel and Hindustan Zinc. And in the mid-cap space, definitely MILE. The buyback also started at 240 and single-digit PE and still sitting on close to 2,000 crore of cash. So definitely investors can consider MILE as well in the metal and mineral space, apart from Tata Steel and Hindustan Zinc and some corrections.
Sarvendra, can I ask you about Tech Mahindra? That's now eclipsed Eicher Motors as the top loser on the index.
Yeah, I think the stock had a nice run of late, and I think within the IT space, with this entire markets going down, probably IT was one space which was moving. My sense is that we are looking in for a small correction here. Nothing wrong with the medium to longer term setups. They are still bullish within the IT space. This is one of the better looking charts and a better looking stock. So I would say that nothing to worry in this decline. But yes, you need to have precautionary stop losses in place. So anybody who's kind of holding this long, 560 is the level that you should be looking in. If it breaks 560, then probably a medium term small correction could come in place. But as long as we hold that level, I think the correction will be over, and going forward next 3 to 6 months, this could be a stock which probably test 660, 670 going forward. So I would say hold with a stop at 560.
By the way, while the other metal stocks may be doing okay, JSPL and SAIL are both down about 5% apiece. Shrikant, before we start wrapping up the market, quick thought here, JSPL, SAIL.
See, for SAIL, our view is very clearly bullish, and we are of the view that the stock is is in strong hands, and it is heading for the levels of maybe 120, 125. But it will take time because now the consolidation period has started for it. So close to current levels 88, or maybe if there is a further more fall in the market, then close to 85, the stock looks good. But with a positional view, one can take long position with a stop loss close to 83 on the downside, and again we can expect 100 to 105 on the higher side. For Jindal Steel and Power, here the picture is a little bit scary because the stock has formed lower top close to 282 levels, and in case if we see further more weakness in the market, then the chances are bright that the stock may again fall to the levels of 220, 225. Currently it is at 252, 253. So from here also 10% cut is not ruled out. So it is better to stay away from Jindal Steel and Power for the time being, and one can certainly take long position in Steel Authority.
Okay, so that's the view there. Before we wrap the market, just want to pull up Apollo Hospitals. I guess that's stock's seen more selling pressure in the last 5 to 10 minutes. It's now down 5.7%, and some strength was actually seen for a stock like V-Guard. If you could just pull up the intraday chart of V-Guard, it's one of the top F&O securities where we've seen good gains. So 2% higher for V-Guard. All right, it's time for us to wrap the markets, and let's head across to Neeraj to find out how exactly the closing is panning out. And Neeraj, a closing above 10,500 is not a good sign.
Yeah, below 10,500, 10,452 for the Nifty Bank 2 ending about 1% lower. This will go down as a soft day of trade, despite the global markets looking okay, and the broader markets would have corrected even more viciously. Remember, they started off well, but about 1% lower for each of these three indices. So up about 0.6% to down about 1%. It's not been a happy hunting ground for the small caps either. I mean, a few names. Kotak Bank, for example, the one loan mover. Actually, Infosys, I'll add to that. But aside of that, this is the sea of red. And again, banks, SBI, yes, ICICI, IndusInd Bank amongst the top losers. Bharti features out there. Autos, the likes of Eicher, Maruti, etc., have all come off. You see Maruti and Tata Motors DVR. Tamo too should be somewhere out here. Hero MotoCorp down about 1.5% too. So rate sensitives have taken it on the chin. And some of the heavyweights, while they're not contributing in a big way, but ITC, HDFC Bank also ending the day in the red. You know, some things are missing in the large cap space when all of these heavyweights are trading with a fair bit of red. But the broader markets too saw some steep cuts as well.
That's right, Neeraj. In fact, the cuts today were seen across the board, be it for benchmarks or the broader market indices. But we all know the fall that one has seen in the last 3 to 4 sessions has been because of the PSU banking space. I would like to pull up PNB. That's the first counter. It did fall to with cuts of 5%, but just towards the end, you saw that recovery coming in. The stocks closing with cuts of 1.7% for the day, and the recovery that you saw towards the closing was after those important flashes which came about, where LIC, which holds stake in the company, have said they will maintain their stake and they are not looking to sell their stake. Besides that, Bank of Baroda, that counter was also under pressure from the PSU banking lot, almost closing just at day's low. So that's the other one which was down. Besides that, second straight day of lower circuit for Gitanjali Gems. That was down another 20% in today's session. Sun TV was the other one which saw sharp cuts in today's trade. So 4% cut for Sun TV, closing almost at day's low. Some of the F&O counters I'm just pulling up. Madison Sumi, Apollo Hospital. Remember, there was an upgrade from Credit Suisse for Apollo Hospital, but still the counter today came under pressure with the market. So that's also closing the day with cuts. And Apollo Tyres was the other one which saw a bit of pressure. Some strength seen for the cement pack. So ACC was up, though just about marginally. PC Jewelers in the second half of the session saw good recovery. So that counter is closing the day at least in the green. And Vakrangi, fifth straight day of upper circuit of 5% for Vakrangi there, Neeraj.
Yeah, well, and this is the picture at close. The heat map will show you a clutch of red on the screen. It was quite a bit of red really on the Nifty today. And then the turnover as well as the market breadth will come up on your screen too. I don't think the market breadth was, unless aside of the starting half an hour, 45 minutes or 1 hour, I don't think we saw too much of an active market. But there you see, for the first half an hour maybe, the green was overtaking the red, but then the crisscross happened. And then we've been at the receiving end as far as the market breadth, in fact, only widened at close, and 1:4 in favor of the declines. Not a good market breadth. The turnover should come up on your screen too. Remember, yesterday was at its peak. Today, the F&O turnover, probably par for the course, I would reckon. Maybe slightly lower on the NSE cash, but this could also be on account of the fact that the rest of the Asian markets were also shut. So trading was expected to be a bit light today. Had all the markets been open, maybe, just maybe, Asian trading would have led to some more uptick out here as well. So not a good day of trade, Navneet. Sadly, closing sub the 10,500 mark. Let's see what it means for the markets next week.
Yeah, I think the markets will now be watching out for the recent low that we've seen, Neeraj, just about the mark of 10,276, which I guess was around the post the budget. So I think that mark will be quite crucial. And so far, the bulls were defending the 10,500 mark. But if you see more of unwinding for the 10,500 put, let's see where the closing comes about, because next week is crucial. You've got the February series expiring.
Yeah, I expect volatility to jump up as well. Final thoughts from all our experts. Shrikant, to you first before we thank you. Having closed at these levels, and your stance at the start of the show was that you would initiate some shorts. So your shorts are already in the money. The question mark only is, what lower levels do you see in the immediate next 2 or 3 sessions?
Yeah, Neeraj. I think Nifty is heading for 10,350 or 10,300. The way the market has spent a lot of time close to this 10,600 levels, I am of the view that it is a bit difficult for the market to break the level of 10,275, but certainly it will come very close to those levels. Bank Nifty is already close to its previous low of 25,050, 25,100. So there is a possibility that Bank Nifty may fall further. But one thing is very clear, that we are heading for very close to previous lows of 25,300 or 350.
Sarvendra, what about you? How would you be approaching the indices on Monday? Let's say if there is a mild pullback, will you short at higher levels?
Oh yes, absolutely. I think, see, for the Nifty and the Bank Nifty, I think the Bank Nifty setups on the weekly are more bearish than what it would be for the Nifty right now. Because if you look at this week's formation for the Bank Nifty, what we have done essentially is that for the whole week, we've last week's range, which was the difference between the open and the close, that candle, we have traded the entire week below that candle. Only one small high is there inside, but the whole real body, what we call in a candle, is lower to the last week. So the entire week, even though there were pullbacks and people had hope, but if you actually look at the chart, the hidden signal is that we never went back decisively into the previous week's trading range itself. It was only the high and low shadows that we kissed, but the real bodies are both the real bodies are different. This week's real body is below the real body of the last week, which is, to me, is a very bearish signal coming after a bearish gap down. So which means from the week that we topped out at 27,500 on the Bank Nifty, the week next was a gap down. We have left that bearish gap, and now the third week coming has traded entirely below the gap down week, which to me is a pretty bad reading. And any more weakness coming in from Dow, let's pray again. As I said, if any more weakness coming in from Dow, then I think Monday will gap down and go much faster than what people expect. We'll go down much faster on the Bank Nifty than any place else. So once the low gets broken, 25,000, I think next 500, 700 points could go out in a jiffy. So I would say I would short sell any bounce. Absolutely, yes. Both the places, Nifty and the Bank Nifty.
Okay, that's a fair point too. But just keep in mind the Dow futures for now are showing that they are trading with a bit of green. Europe too, for now, a mild bit of green. So the globe is not a sad place. Just keep that at the back of your mind. Thank you so much, Sarvendra, as well as Shrikant, Chouhan, gentlemen, for taking the time out and sharing with us. All the best with your short positions, both of you. And thanks for taking the time out today. Mr. Chokkalingam, some final thoughts from you. I was just talking about the auto stocks a bit earlier. Substantial pullbacks into a lot of them. We don't talk about these in a regular way, but I was just looking at the kind of reactions that have happened. Maruti is about 10% off its recent highs. If I take the October highs into account, Eicher is off almost 17%. Tata Motors, one of the cheapest index stocks, is down almost 20% from its October highs. What do you do with this large cap space, which probably promises to be the one pocket where earnings growth could well continue?
Yeah, very interesting question. Among these three, surprisingly, Tata Motor always remained very cheap in terms of valuation. I still have a little fear on the business coming from China. Chinese market accounts for 1/3 of JLR business. So I still have a doubt on pricing pressure, margin pressure coming on Chinese business. So therefore, I would prefer Maruti. Maruti has proved its ability to withstand the volatility in the yen exchange rate, yen rupee exchange rate, and even on the domestic market, whatever developments happen in the economy or auto sales. This one company, which has been able to grow consistently for the last 2 years. So I would prefer among these three Maruti, and I believe it's a very safe bet. As all of us know, with the expansion coming up, I think Maruti is in a better position to reward in the next 6 months to 18 months time frame.
All right, Mr. Chokkalingam, we'll let you leave on that note. Thanks a lot for joining us today and taking us through your views on the markets and also different sectors. It's time for us to slip into a quick break. We'll be back with more on the other side. Stay tuned.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much. They still don't know you after all these years? क्या करें? पहचान ही नहीं है. Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens. Come on, yaar. I'm not big enough to list. Chal, let's leave. There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business. Really? Yeah. My kind of company? Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है। चल।
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Back with countdown right here on Bloomberg Quint. Speaking of big voices, the India story is not looking as good as it did a few years ago, or in fact a year ago as well. That's the word coming in from Mahesh Nandurkar, India strategist at CLSA. However, he does not see any reason to panic. In a conversation with us earlier, he says CLSA remains overweight on India, although they've reduced the relative weightage in the Asia Pacific portfolio. Listen in.
The macro story isn't really as attractive anymore as compared to what it was, let's say, 12 months back. So 12 months back, India's macro story was picture perfect. Inflation coming down, rates getting cut, fiscal consolidation happening, current account deficit also at the lowest levels. But on multiple fronts, things have changed. So to that extent, from a macro standpoint, things are not looking as good in India today as it was 12 months back. I don't really see as a reason to panic as such. And what we have done, when you refer to Asia Pacific portfolio strategy, is also that as compared to an 8 percentage point neutral weight, we were holding almost 24% in the Asia Pacific portfolio, which is almost like 3x. So there's been a bit of a reduction in that. So we still remain optimistic in our Asia Pacific portfolio. But yes, we have to take cognizance of the fact that macro in India has worsened.
Mahesh, just wondering, pre-budget, the whole conversation was centered around capital gains, and we've seen that come in, STT not go away as well. Now that you've had time to digest and speak to investors, what are they saying? Could this prove to be a stumbling block for India compared to some of the Asia Pacific markets?
It is definitely a small irritation for several international fund managers, especially on the operational side, because a lot of investors will be struggling with the calculation of things like NAV. How do you calculate NAV? Do you build in capital gains taxation, or you do not build in? So those kind of issues also come in. Also, given the fact that index, whether it is MSCI India or Nifty, those indexes will be calculated without any tax cost. So it will also become that much more difficult for fund managers to outperform the index, because there is a systemic sort of level drawback brought in by the taxation. But apart from that, I don't see this as a big investment decision hurdle as such. It's still a relatively small taxation as such. But yes, it is, I would say, more an operational issue at this point in time than an investment decision as such.
Did the conversation about this move by SEBI to not allow Indian exchanges to share data with SGX, and effectively at some point of time, if not 6 months, then 18 months, and the timelines out there are debatable, at some point of time SGX Nifty futures or the Dubai futures ceasing to exist, did that come up in conversation at all?
Yes, that was a part of the discussion, especially because the SGX was also looking at introducing single stock futures on the SGX. So there was this possibility that some of the stock-specific trading that happens on Indian bourses could have also shifted offshore. So some of the investors who do not have the FII registration in India at this point in time, or are concerned with the taxation issues, were looking at these other options. But now, with those options being taken off, I guess the investors will have to be in India to be trading the Indian single stocks.
In fact, Neeraj, there were some reports indicating that now those FIs will actually move base to countries like France as well as Netherlands, where India has signed a treaty. Mahesh, my next question, I'm just going back to your roadshow in Europe, where HNIs, they actually remain bullish when it comes to the Indian markets, but still, what's the kind of India story that you sold to them, and what were the key concerns that they highlighted about India to you?
Well, so we have been very, very bullish on the whole housing recovery as the story. We believe that the housing affordability is at the best levels that we have seen in the last 2 decades, and that has been achieved because of the property prices remaining more or less flat over the period of last 3 to 5 years, but the incomes have grown at the rate of 8 to 10%. The mortgage rates have come down. So the affordability is really attractive, and we just need some form of a trigger for the housing market to start recovering. And I think we are probably just about to witness that, especially now we have RERA in place, and the buyer confidence has also been boosted because of that. So that has been the key pillar of us being positive on the economic growth outlook and the corporate earnings growth going forward.
Okay, so that's CLSA view on India. But let's move ahead. Welspun Enterprises reported a strong third quarter with profit and revenue seeing a sharp jump. EBITDA has also been positive for this quarter. Joining us to discuss the quarter gone by is Sandeep Garg, MD and CEO at Welspun Enterprises. Also, Nikki Mirchandani from our research team joins us. Nikki, over to you.
All right, the revenue has been up by a good 500% for this company, and the net profit has also risen by over 4-fold. The first question that I have for Mr. Garg is, so what explains the multifold jump in top-line growth, and how sustainable is this growth?
If you go to the last year, we were primarily operating a very small company which we had consolidated, and we had just started our work on first hybrid annuity project, Delhi-Meerut Expressway 1. This year, the results are primarily emanating from the Delhi-Meerut Package 1 excellence in execution, and more from earlier we were generating most of the revenue from old boot projects. Now we are generating most of our revenues from the hybrid annuity project EPC, and hence our results are much better. As a EPC of hybrid annuity, we are making between 10 to 15% profits at the site level, and these are showing up in the results in the profit as well. So most of the revenue, 298, most of it comes from hybrid annuity projects, and there is a substantial contribution towards the profit as well from that EPC project. In terms of its sustainability, we have now 4,000 crores worth of unexecuted order, which has started clicking in EPC contracts. The first project has started, got the appointed date on 3rd of February. The other one is expected to get the appointed date by the end of February. So these 4 projects which we already have in our kitty should start giving the revenues within next quarter, and hence the growth is definitely sustainable. To my understanding, we are still on the initial curve of the growth. The exponential curve of the growth should come in the next 2 or 3 quarters.
All right, sir, I'll need to understand when can we expect the full execution of your order book, which currently stands at around 4,100 odd crore?
So most of the projects are about 24 months, other than one project which is Antasimeria, which is 48 months schedule. So we expect most of the contribution to come in 8 quarters from the start, which has started from this quarter onwards. The Antasimeria project would take about 3 years to build post its appointed date.
Also, sir, I believe we have divested from the trading business and we just left with infra, which is our core focus area right now. We've seen a good tenfold jump in that revenue business for infrastructure. I'd like to understand what kind of outlook can we look forward in this segment particularly?
That is correct. We are no more in trading. The only revenue generation is from infrastructure and the investments that we have made, or the treasury income that we have made. So in terms of our infrastructure segmental reporting, if you would see that the profits are in the range of 11.7% for this quarter, and that trend is going to continue or improve because the overheads that are allocated to infra will continue to become insignificant as the revenue grows up. The company has prepared for much larger revenue growth going forward. We currently have an order backlog of 4,000 crores, and given the opportunity of 1 trillion rupees in hybrid annuity in next 6 months, we expect that the order book should grow. So our segmental reports of EPC for hybrid annuity would be in the ranges of 10 to 15% going forward as well.
Sure. I understand that the order book currently stands at 4,100 odd crores, as I just mentioned earlier. I'd like to understand any specific targets that we've set for this financial year, and also the growth that you'd be looking in terms of your book, in terms of the TTM revenue as compared to the TTM revenue for going forward in the next financial year.
It is very difficult to predict the order book for next 2 years. It will all depend upon how the NHAI projects are bidded and awarded. However, till the March 2019, our target would be to acquire anything between 7,000 to 8,000 crores of order in addition to the 4,000 that we already have.
Mr. Garg, the last question that I have for you is in terms of the new order win, anything that we see for this quarter or for the next financial year?
At this point in time, we have 5 open bids amounting to about 4,800 crores. We expect in this coming 45 days of this quarter, we would bid another some 20,000 crores worth of job. So we believe that on a success ratio of 15%, we should have anything around 3,000 to 4,000 crores of order as and when they are awarded.
All right, Mr. Garg, thank you so much for your time. It was a pleasure talking to you. Back to you guys.
Thanks a lot, Nikki, for that interview. While clearly the stock was quite active this week, Welspun Enterprises was up nearly 9% for this week. Let's move on and talk about the rising NPAs. From rising NPAs that we've seen and changing debt resolution norms to the latest fraud detected at Punjab National Bank, public sector banks have not had a great run. And Dhananjay Sinha of MK Global does not expect a significant improvement. Well, in a conversation with Bloomberg Quint earlier today, he lays out how the rising NPAs are starving public lenders of growth capital at a time when private banks are well capitalized to grow. Listen in.
I have been underweight PSU banks for donkey's years, almost like 7 years. I see the key issue is bank managements have been talking about the fact that NPAs have actually peaked out for a long time. You've seen that, but consistently that has actually grown. The thing is, now you have the RBI guidelines on the restructured asset. Incrementally, it would mean that the option for banks to actually classify bad assets into restructured asset incrementally will go away, and hence you have to provide for it on a higher basis. So GNPA growth happens at a higher pace. So in the recent quarters, we saw that the GNPA growth has actually started to taper off. That will start increasing.
Again, yeah.
The other aspect is the existing existing stock of restructured asset, roughly about 2.6 trillion rupees, or thereabout, 2.5 trillion rupees. How that rolls out going forward. So are there slippages coming from there also? So what is classified as standard asset within the restructured asset also starts sort of adding to the pipeline. So we don't know how much will that be, but clearly the shock is on the positive side as far as GNPA growth is concerned.
Upside.
And on top of that, this is what it is. The third angle, of course, is the fact that post the demonetization, all the banks had actually, especially the PSU banks, had gone overboard in terms of the GSEC exposure and increased. Yeah. And my hunch is that they actually increased duration in their GSEC portfolio to gain from the trading profits. So if you look at past 6 quarters, excluding the December one, roughly about more than 100% of the total profit before taxes were actually contributed by trading profit. So with the yield curve actually steepening, you have a significant hit in terms of the trading losses. So your ability to grow is not there, is compromised, and some of these developments actually add to that woes. And you have credit cost rising, and you have trading profit, which is on the other side. So clearly, from a structural standpoint, even cyclical standpoint, ability for the PSU banks to actually grow or regain market share is severely compromised, according to me. And hence, I think whatever cyclical recovery that we are expecting from a credit growth standpoint largely will be taken over by private lenders.
Private banks again.
So that's how I look at things, yeah.
I have one last question, and I think it's both equally, Dhananjay, to you as to Ira. I think when the government last announced its recapitalization program, and people were a little pleasantly surprised that it turned out to be bigger than anticipated. But today, when you look at the situation with both SBI and PNB, you got to wonder whether even that amount is good enough or not.
Yes.
And so I'm just, at this point in time, are we at all talking about the government needing to step up its contribution to bank capital even more than what they announced? 2.1 lakh crores is what the total program was, right? But these top 2 banks are showing holes much bigger than anticipated.
But SBI has capital. SBI does not have a capital.
So therefore I'm asking, does it mean that we're going to, is the next big thing will be to go back to knock at the door of the government and say, you're going to have to cough up more capital, otherwise you're going to see a shrinking size of the PSU bank industry?
Correct. I think we have done this analysis on an aggregate basis, and I'll talk about SBI also a little bit. So we looked at that 2.1 trillion, recapitalization thing that is there. I think our estimate in terms of the GNPA this is written somewhere around November. So 7 trillion rupees worth of GNPA and restructured asset of about 2.6. So roughly about 9.6 trillion rupees worth of stressed assets. So there is 45% provisioning that you have done on average for all the PSU banks. They have provided 45% on the GNPA. So you have an unaddressed or unprovided GNPA of roughly about 6.5 lakh crores, right? Yep. So if you look at that, and then we look at, we have taken a haircut of 75% of the total outstanding stressed assets. So if you look at it, people said that it is very aggressive. You should be somewhere around 50%. And if as the things are turning around, example is PNB, that 75% haircut was a fair level of haircut. So if you look at that and say that there is what is a tangible tier 1 and what you need to have with respect to the required level of 9.5% tier 1 capital, we arrived at a number saying that 2.1 trillion rupees that has been provided as recapitalization is falling short by 2.6 trillion rupees. So
it's
clearly
50% of what is required or less.
So yes. So my analyst also said that if you take into consideration this haircut and then write off the 75% haircut, then you have an ability to grow going forward and hence plow back some earnings from future. And hence, if you consider that, then possibly it is adequate. But if you look at the PNB example, is when you take additional, you knock off 25% of your book, then your asking rate is even higher. So I'm saying that even 2.6 trillion worth of shortfall that I'm saying looks to be realistic, right? 2.1 is definitely inadequate.
So you're saying that the recap should have been somewhere in the size of 4.7 trillion?
Yes, 4.7. Yes, exactly.
Well, let's see if that leads to some more pain in the PSU banks and PNB in particular. But with that, it's a wrap on this leg of Countdown. From all of us who put this show together and from Navneet and me, thank you so much for watching.